Punita Kumar Sinha, who's now joining us on the show, managing partner at Pacific Paradigm Advisors. Hi, Punita. Good to have you on board. Just let's understand from you at a time like this when we are seeing quite a bit of volatility in the markets. Yes, we may be confined to a range. How is India looking versus some of the other economies?
So India continues to be in a sweet spot for a number of reasons, which I'm sure you've heard from several other people as well. The macro environment is benign. Obviously, we are growing rapidly, I think, but the most important thing is that every company globally is now looking at India as a source of opportunity and growth. So they're all finding ways to invest more in India. So there's a lot of strategic interest in India, and that means that there will be a lot more investment, capex, and more growth coming as a result of that. So the Indian companies are gearing up for that demand. And I think the good news is that the Indian companies are not very leveraged. The balance sheets are not very leveraged. The consumers also not very leveraged. So there is ample headroom for Indian companies to invest further for in preparation for that demand. Now, of course, there are some global woes out there that the markets have been ignoring. One is obviously the Chinese data is very disappointing. There's still deflation. So maybe China may have to, the government may have to push some more stimulus. But right now, the data is disappointing, and that doesn't bode well for the global economy. US debt has been downgraded. So US bond yields have started to rise. Crude oil prices have gone up. And of course, food prices continue to be going up, which, could kind of be concerning for inflation. So I met some senior economists from the IMF, World Bank, and they said that the biggest concern for central banks right now is that there is the upside risks to inflation and interest rates. While right now interest rates have been kind of on a pause, there is concern that if this kind of food price inflation continues, will they have to raise rates? So all of those things are looming out there, but India continues to be a sweet spot, and definitely secular growth is in the cards.
Punita, good to have you back. Hope you're feeling better. I remember when we met at a
Yes,
social
yes.
function.
I know, still not great, but I took off my collar for TV.
What happened?
Well, a fall.
Okay, wish you a speedy recovery, but I'm going to change gears and talk about if there is a fall in the market, do you think it will be largely global in nature? It cannot be because of India factors.
Yeah, I don't know. Well, we're going to have the RBI policy in 40 minutes, so there could be a surprise, though I doubt they will raise rates. In fact, I just wanted to mention that again, the Fed watch is showing that 86% of the people do not expect, even in the US, an interest rate hike in September. And so right now, I think the view is that central banks may pause, but if food inflation goes up and keeps rising, that's something they're going to have to watch. And we may hear some of that today. So yes, I don't think anything negative on the horizon for India specifically. If there is anything negative, it will be coming potentially globally. But of course, India specific, there you have to watch for the valuations. Most of the earnings season is over. Companies that don't report good results are getting punished. The stocks crash, and companies where results are good are seeing, stocks rallying. So I think with the earnings season almost over, the focus is going to shift back to macro.
Punita, in terms of projected returns now, there are two factors which are at play. There's an election cycle in India followed by a US election cycle. They are both large events. So from a positioning standpoint, what should one do, considering that these election cycles, both India and US, the markets which really matter to us, these events would inject that element of volatility?
At the moment, till year end, I don't expect any volatility coming from elections. I think the US election narrative will only start sometime in the spring of next year. The election's not till November. So I think we have more than a year right now. So I wouldn't worry about the election at the moment. And in India, also, I wouldn't worry so much about elections. The economy is on a strong footing at the moment. So that's where the focus is going to be. And from a global perspective, India is the shining spot.
Punita, just specifically talking about India, while near 20K, people were getting just a little bit uncomfortable about valuations. But, we've cooled off a good 500 points, at least on the index from there, although the mid and the small cap, robustness continues. Is there valuation comfort now, or you think the market needs to ease off more?
Well, I mean, I think India's trading close to, its higher end of its valuation range versus its own history and versus other markets, but it's actually not at peak valuations. So it's not reached frothy valuations. Given the interest in Indian assets, we might still see flows coming back to India. And while I think if you look at the large caps in particular, India is not one of the best performing markets, even in July. So, and year to date, India is not one of the best performing markets. So, while sitting in India, it appears, and those who are investing in India, it appears like India has really rallied. A lot of that action has happened in the small cap space and mid cap space. If you look at the large caps in particular, I don't think they're that expensive as it might appear. But yes, valuations are high. So I don't think there is still a lot of valuation comfort, but I don't think it's like reached frothy levels.
So, Punita, the next question is, within the market right now, what are the most overvalued and undervalued pockets, if there are any undervalued pockets, that is?
Well, I think to decide on what's valued well, you have to really look at the growth prospects for those companies. And I think the growth prospects for a number of sectors and companies are still intact. So it depends on how far you want to look out for growth. I definitely think small caps have rallied perhaps more than some of the fundamentals justify. It's all liquidity driven, as you've seen, a lot of flows into small cap funds, and a small amount of money can really push up the valuations and the prices, and that's what's happening. Mid caps also have seen some of that froth building up a little bit, but small cap definitely has frothy pockets. So I think the secular trends are there for many sectors, and so one will have to get very selective. And I heard Nikun say earlier that you have to work harder in this market now, and I agree with that you'll have to work harder and really look at each company on a case-by-case basis, although the macro trends are definitely in favor of India.
So, Punita, there are a couple of stories, a couple of themes where right now markets are confused. And one most popular theme where markets are debating whether it is good for India or not is AI. Conventional wisdom says that AI means less manpower, but more productivity. Less manpower, more productivity, well, that's bad news for IT sector. There are few who believe that Indian IT sector can adopt. They've adopted post the Y2K update, they've adopted brilliantly when it comes to enterprise, Mac and cloud. Can they really adopt AI as the new normal?
Well, I think we're still a little time away in India from AI. I mean, compared to what I'm seeing, the use of AI in some of the other developed markets or economies like US and all, India is still lagging far behind. I think most of the companies in India in most of the sectors are not really using AI. So, so I think we are really quite far behind, and I think it's time. Now, one of the positive trends for AI is that, globally, companies are going to look for more software programmers, and India in the near term will benefit from that.
Punita, really appreciate your time. So glad you could join us, and hope to see much more of you going forward.
Thank you.